Welcome back to the Max Your Dash podcast. Thank you for listening, liking, and sharing. I'm your host, Steve, back with my co-hosts, Mark and Nate. Thanksgiving next week. How we feeling? Hate turkey.
Dude, I can make you a turkey you'd like.
I actually did smoked turkey breast last week. It was really good.
There you go.
It was really
so
good.
you don't hate turkey. Take it back.
Take it back.
This just in, Mark likes turkey.
Dude,
Smoked turkey.
When I sliced it up, there was juice just flying everywhere. It was unbelievable.
Did you buy the Wegmans honey brand one?
Yeah.
What's your favorite Thanksgiving dish?
I'm definitely a sides guy. Green bean casserole is really good. And then I like some people make some good like sweet potato or yam type things with like either pecans on it or some marshmallows toasted on it. You ever had that?
Marshmallows?
Dude, it's a real deal.
I have had that.
Seems weird.
It's really good. You literally like put it all in a pan, put the marshmallows on top, put it under the broiler. Oh God, it's good, real good.
We've added mac and cheese into our repertoire.
Mac and cheese is legit.
We were never a mac and cheese family, but we just added it in.
I don't know how I don't ever have mac and cheese.
You guys ever had that?
I love mac and cheese.
You ever had a broccoli casserole that has Cheez-Its in it?
These are really random combos of stuff, dude.
Real good.
This is what you get in the Italian households.
Yep. Before my grandpa died, he didn't like turkey either. Oh my God. So we got to have like good food. I just don't think turkey's that good. It makes you tired.
No, it's not that good. I'd rather have chicken.
Deep fried.
Are you guys like and you like to mix everything together?
Yeah.
Like I just love like a nice big
Yeah.
fork full of mashed potatoes, gravy, green bean casserole.
Oh, yeah.
Throw it all
That's
on.
the only way I can eat turkey, really, is I like dip it in like the gravy and turkey.
Yeah, I'll do an everything sandwich later that night. Just put everything
yes.
in bread, a little mayonnaise.
Yeah.
I could still go out. But like the pies are good too. I can't believe you weren't happy that I ordered an Xbox controller. Neither one of you even reacted to it.
I'm still confused
I
where
don't
you're at
believe-
with this whole thing.
You're not going to play it. It doesn't matter.
Nick said I don't even need to get anything to play.
You're not going to play
I don't
anything.
know.
You've been saying this for years. I'll believe when I see your name pop up online.
I have a bright green control. Oh yeah, so I do need an online account.
Yeah, dude. Unless you're going to download
I'll get it on the
something
way home.
and
I'll
play
get
the
it on the way home.
campaign for something. This is going to be a short one today. This is
right,
going to be,
let's do it.
hopefully this is, you reference this. This is the end of the year financial checklist. If you're worried about all the stuff you got to do the end of the year, this is supposed to be your one-stop shop for stuff you need to make sure you get done. There's deadlines by December 30th, 31st. Is there 31 days?
Mm-hmm.
Get all this stuff done from a financial perspective. It might not be applicable to you. It might be, but you can definitively use this episode as your checklist for end of the year financial checklist items. It's going to be on the shorter side just because there's not really much to say about each of these. We'll do a short explanation. But yeah, let's go through them. First one, tax advantage contributions. Got to get those done by the end of the year. What are the accounts you need to do this for?
Health savings account. And on that note, because I feel like I have this conversation every year. Like I'll meet with someone like 3 months into the year,
Yeah.
and their HSA deductions are not coming out. You need to go in and make sure you have that enrolled every year. At least that's been my experience. I don't know if you guys noticed that. Yeah.
You have to do what?
You have to make sure that your HSA contributions are set up every year. Like it's not.
It doesn't
A lot of
just-
times it doesn't just keep going. I've
Okay.
noticed that.
Okay.
So you're like when you do your open enrollment, make sure you're set up for your HSA contributions for next year too.
That's a new one.
Okay, so HSA.
Yep.
FSA. Here's an interesting with FSA. Actually, maybe not as much about contributions, but you got to use it by the end of the year.
Oh,
So if you're doing
Yeah.
like dependent care FSAs, you gotta
Yeah.
submit those.
that's like what a
reimbursements.
scam is that?
Yeah, that was bullet point number 3 is just
Ooh,
make
I
sure
jumped ahead.
yeah, you got to use your FSA. It doesn't roll over like your HSA. So if you got FSA dollars, use those in the next month and a half. Go buy some toothpaste or something.
Scam.
401ks.
Yep.
401ks.
Running out of time there.
Right. So
Yeah.
so if you're somebody who you could max it out, you've got the cash, you got a bunch of money
Yeah.
in savings, but you're not on track to max it out.
Yeah.
What can you do, Mark?
Dial it up. Dial it
Yeah,
up.
this is a common question. Can I put a lump sum into my 401k?
Not out of your pocket. No.
Yeah. But
Gotta-
you can increase your percentage.
Yep. You can go up to, I think it's 99%.
Yeah.
Yep. You can do just dial it up for the rest of the year. I've done that with people before in the past.
And then you got to remember to go back and
Yeah.
change it again.
Yep.
But
Yep.
IRAs you have until April, so those aren't an end of this year thing, but you have until the end of the tax year to contribute to IRAs. So just think about like any employer plans.
I guess if you wanted to get a Roth conversion done in this calendar year, you do need to do it by the 31st to realize that income this year.
So Roth conversions. If you're converting from an IRA to a Roth IRA,
harvest your losses.
Yep. Tax loss harvesting is number 2. What's tax loss harvesting?
What are the tax advantage contributions? I gotta. Should I save a special one for the end?
Yeah. Okay. What's tax loss harvesting?
If you have any losses, might be hard to come by.
Unless you really.
I mean, you had to pick something bad.
If you had like 20% of your portfolio in like China,
or go on DraftKings.
Yeah. What's up? I'm trying to think of a. No, I'm not going to pick on any stocks. It's probably a bad idea.
Yeah. Okay, but essentially you can offset your gains with some of your losses.
Yeah, and you do have to take those losses in this calendar year if you want them available.
This is a big deal, though. I find like people don't know what this is. And if you're managing your own brokerage account, I find a lot of people have not really ever done that or taken advantage of that. And it can be a big deal. Like it's probably hard to do that right now. But had you been doing that in the previous years, it'd be really helpful right now if you're going to be selling any positions.
What's the deal with how much you can do and how much you can roll up to the next year if you don't use it?
There's not a limit on losses that you can take. You can take all of them. You can use $3,000 per year against income, which could be, if you're in a high tax bracket, it's a pretty good deal.
Yep.
And then anything left just keeps going.
Okay. But you can realize an unlimited amount against gains.
Yep. Unlimited amount
against gains. Which is the big benefit to doing this.
Yep. So some people might have leftover losses from, was it 2022? Yeah, 2022. That maybe will be a good year for some gains. So actually, there's a good one. If you have some harvested losses that you haven't used,
good time to rebalance.
Maybe consider doing realizing some gains, tax gain realization, because you have losses to use.
Yeah. Okay, so tax loss harvesting. The third one is use your FSA. We talked about that. It's not like the HSA. You got to use all the money this year. Gifting. So what's going on with the gifting stuff? I'm not well versed with this.
I don't know it's like 18,000 now or something like that.
Yeah.
But the actual limit is if the 2020 what are they called? The Tax Cuts and Jobs Act, if that gets extended, it's really gifting is not really an issue for anyone because you can do more than the annual amount against your lifetime exemption. So
and the exemption is huge.
It's like $12 million per person.
Okay. Yeah. And gift's not tax deductible.
No.
So it's
not. But if you are doing like the normal annual, you do want to.
If you're trying to do annual gifting,
Yep.
Got to do it by the calendar year end.
Portfolio rebalance. So this isn't like a certain dollar amount you got to have done or something like that. Like tax advantage is more so like a recommendation of just making sure your portfolio might be out of drift from the year and just making sure that you're rebalancing heading into the new year. There's no like deadline for this, but it's more of a probably best practice sort of thing.
Yeah, and we just talked about it in the newsletter. Like there's bias in both directions right now in the markets.
Yep.
Depending on which side of the aisle you fall on. And I get that out of your mind.
Yeah, you should first probably know what your risk tolerance and time horizon and stuff is. So you know what weightings in your portfolio should be. So then if you are going to rebalance, you know what you need to do.
Political party is not an investing decision.
Correct.
And that it does not seem to be the case for a lot of people.
Really?
Yeah. I feel like I've got people on both sides that are like, oh, he's in office bad. Oh, he's in office good.
Yeah.
Yeah.
I surprisingly haven't had as many.
I haven't had many people talk about it either.
Yeah. Good. It's been a little quiet. Actually, the thing is quiet after the election.
Like you said, there's bias on both sides. I feel like since the entire time we've ever been in this career, isn't there always bias on both sides?
Yes.
Like the market. There's always 50% of the people that think it's going to go up and 50% that it's going to go down.
RMDs. So this is required minimum distributions. This is for our older clients and people who have inherited IRAs, right?
Yep.
What's the deal with the RMDs?
Get them in. They. I don't know if that law's changed with the penalties side of things, but they're going to start penalizing you for not taking RMDs.
What is an RMD?
Required minimum distribution has to be done by December 31st. And so inherited or over, what year are we in? Is it 71 or 72 now?
I'm always confused. I got to actually.
It might be 73. They've changed the rules and it goes up to 75 soon. So
yeah.
But
if you inherited money
Yeah.
from a qualified account,
Mm-hmm.
like if your grandparents died and they had a 401k and you inherited money, you have to take out a certain percentage.
Yeah,
each
depending
year.
on what year you inherited it, because they changed
Right.
that rule too.
That's very.
I think it's like if you inherited it before 2019.
Yeah, I think
If you
it's something
inherited it
like
before
that.
2019, it's an annual specific calculation. If you inherited it after that, it's got to be distributed over 10 years.
Yeah. Essentially, once you get to a certain age, they force you to take money out of some of your retirement accounts so they can take some tax money from it.
And I think it's still 72 this year, but it might be 73.
And so if you don't take that before December 3rd, if you don't take that before and you wait till after, what happens?
So it was in the past, basically nothing. You could get an exemption pretty easily.
Really?
And you'd get away with it.
Okay.
They supposedly have changed it. They lowered the penalty percentage, I think, down to 25%, or they are lowering it down, but they're actually going to enforce it. That's the big difference.
Okay. Like penalized from the RMD you're taking out?
Yep.
So if it was like if it did take out $10,000, they'd take $2,500 of penalties?
Yes.
Oh, okay.
Yep.
Gotcha.
Yep.
Okay. So RMDs before 31st.
Yep.
Health insurance coverage. So this kind of goes into open enrollment, but like if you buy your insurance through the marketplace, usually you got to renew by December 15th. Depends on what state you're in or like how you're buying it, but that's typically how it is. Make sure you get that done, because if you wait until January, then you might have a lapse in coverage and you might have coverage for like January and February. There's no like penalty, but they usually, depending on where you got your health insurance, just make sure that's good for 2025.
Mm-hmm.
Anything to add there?
I feel like we're missing something. I mean, I guess we didn't really say it, but like simple IRA contributions would be the same as the 401k. You would want to get those in before year end.
Mm-hmm.
I think this is kind of a little bit of an interesting strategy, but we were talking about tax loss harvesting and realizing gains and whatever. It's if you're somebody who knows they have to take out a large amount of money for something, like let's say you have got a big project in March that you're going to need $50,000 for, it might make sense to do a distribution
Take some now
and then a distribution next year to split up the tax years depending on your situation.
Yep.
Last one on the list is emergency fund. This is another this is more of our recommendation, best practice, but maybe it's time to shore up the emergency fund a little bit before you head into the new year, have some good vibes going on, start the year financially feeling good with a foundational perspective, but checking that rainy day fund, because I know the end of the year can kind of get a little crazy from a spending perspective for a lot of people. So maybe shoring that up before you hit January could be a good idea.
My fun one, and I can't get into specifics on this because I don't know them, but you'll be able to find this stuff on the interwebs. If you own a business,
Okay.
it might make sense to purchase a vehicle before December 31st through the business. If you're allowed to do this, talk with your accountant, because you can capitalize. It was like you capitalize right off all the interest right away or something like that. Or it's like a full blown. There's a big tax deduction. I know this for business owners that need to buy vehicles, and getting that in.
Ask me if I figured out what I'm doing with Nicole's Jeep earlier.
No.
We're buying cars.
But that would be cool.
Dude, Mark's blood is in car sales, I'm telling you.
I would crush it.
It would be so
His
good.
blood's in car sales. You know
What
that
would be
Andy
the brand-
Elliott guy
What would
with
be
the...
the brand you think you could sell the most of? Like,
The
are you like
brand?
selling like? Are you selling like pickup trucks, or are you like a Mercedes-Benz sales?
Temperado Tahoes.
I don't know. I feel like I would do a good job with 3-row SUVs. I told you guys about when I got locked in the back seat of one of the dealerships, right?
Oh, yeah, stickers. They kind of give you everything you want.
But yeah, no, seriously, business owners, if you need write-offs, like you get your purchases in now.
Yeah.
It's Black Friday sales coming up. You need computers, buy them now. Get your deductions in.
Yeah.
Get them in.
Good point. Make sure family CFO price is going up next year, so make sure you get it.
Locked in. No, I
think we hit. Did we hit?
That's pretty much everything on the list. It seems as though, like, because it's so short, but those are really like the deadlines that you have to do for year end. There's really nothing else like much crazier. Every other deadline's around tax time.
Mm-hmm.
There's usually like the big financial deadlines are either end of the year or tax time.
We'll do this again in like February for tax time.
Yeah. Okay.
It is tough because it's what, if you're going to like try to max out your 401k, you probably only have like 2 paychecks left.
Yeah, and sometimes it takes a paycheck to go through.
Yeah. All right. Anything, Mark?
No.
Okay.
No.
All right, guys. Thank you for listening and watching the Max Your Dash podcast. We will catch you in the next one.
Securities and investment advisory services offered through Osaic Wealth Inc., member FINRA SIPC. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth.